JG Francoeur, thanks for joining me. We're live.
It's my holiday look with the hat. I don't do many of these with hats on.
I thought for sure you'd have your Santa hat on today. So listen, we're getting to work. We're going to do our kind of final view of the world, a little bit of conversation around politics, around what's happening in the world of real estate. You know, the title of this one is Cash is King, Cash Flow is Queen. How do we get cash flow in these days? Given what's happening in the real estate world, we got a lot of ground to cover. I want to talk about, let's open up. Oh, and then of course we've got politics. So we got a lot of things.
It would not be a show if we didn't talk about politics in some way, shape, or form.
Oh man, you know, Chrystia Freeland, she goes out with a bang, throws Trudeau under the bus. Beautiful. It's probably the best thing she's done since she's got into that.
Since taking office, yeah.
Actually, in my world, it actually gave her a little bit of credibility. It was a really well-written resignation letter, and it was great because she finally had the courage to throw Trudeau under the bus, which he deserved. So that's awesome. But then Sean Fraser, our housing minister, he vacates. Oh, and by the way, they're replacing both Freeland and Sean Fraser with two people of equally lacking in any experience of those portfolios that they have to manage. It's like really, anyways, very, very annoying. But all said, listen, it's just a question of time. Jagmeet keeps kicking the can down the road, so he in fact will get his pension. So he's going to, whatever he's going to do. We don't know what he's going to do. So politics, Canada's a mess. Our U.S. Canadian dollar, we keep losing value. That's all, by the way, that's 100% politics.
I'm going on a trip to Mexico, and my friends that are coming with us, they texted me the other day and are like, "What's happening to the Canadian dollar? Why we're getting decimated here, right? Because we need U.S. dollars to travel." So here comes the future of Bitcoin. Watch out.
It is painful, isn't it? So listen, let's talk a little bit about what's going on. We know that, in the real estate world, we're seeing both real and anecdotally that things have certainly slowed down. I don't know if you're aware of this, but in Toronto, the condo market in terms of both construction and sales are at 27, call it 30-year lows. So, that condo market and the pre-sale, there's like almost zero pre-sales, relatively speaking. So that market is melting down, and that's the way we're going to kick off 2025, sadly. Yep. But having said that,
is it sad though, Patrick? Is it sad? Because I'll tell you this. I've been reflecting on this because in and around here, I'm in Peterborough. So I'm not in the GTA, but I'm a little bit secondary market outside of GTA. Yep. I've been thinking about the condo market meltdown, and how positive that is for some of us investors. Like the condo market, when it is firing on all cylinders, Patrick, it's like a bit of an orbit. It attracts all the resources to it. The construction labor goes down there. The union labor goes down there. The non-union labor goes down there. The agents start selling nothing but condos. The mortgage brokers finance nothing but condos. And it really attracts a ton. Right now, none of that's happening, which means everyone's real creative because they got to make deals happen. And they're making it happen in secondary markets like Peterborough.
I get all that. And you're not, I do follow that whole thought process. But the sad reality is this is going to get very, very painful because all of you said what you said is true. And we're going to see a lot of, let's think about this, let's say, for example, I think the number I have in my head, and I've got so many numbers and I don't have it out in front of me, but let's say, they're doing 5,000, I think, sales of condos, pre-sales, like 5,000 as opposed to 22,000. So it's a very sad state of affairs in terms of the sales side of it, but let's just unpack that a little bit. Nothing new is coming out of the ground. So right now, everything that you're seeing that is, in fact, happening, it all started 3, 4, 5 years ago. So it's just coming to fruition now. Nothing new is coming out of the ground because developers can't make it work. They can't pre-sell anything. So if you can't pre-sell, if you can't get your 70% sold, then you're not going to get the financing you need. So nothing's coming out of the ground. So we know that today there's a huge abundance of condos in the market, and in probably 4 years from now, we're going to be bumping up against a huge shortage. Now, having said all of that, back to we have to look at the reality of it and how many jobs are going to be lost. And although it's easy to say, well, we're going to lose a lot of construction jobs, when we think about a condo sale, we've got, the building of the condo and all of those things that went into play. But then you get into the sales and you think about the lawyers, the accounting, the realtors, the realtor teams, the paralegals. Like, there's a lot of moving parts in a sale, and all of those jobs are going to be compromised at some level, some 100% compromised.
They already have been.
Dude, it's only getting started. It's started. It is going to be an epic.
The sales are already down from 22,000 to 5,000. It's not like it's what you were talking about 18 months ago was going to happen, is happening. That pain is already out of the market. People have already felt that pain. I mean, you and I both know lawyers, Patrick, lots of lawyers that are in this space. And they're like, yeah, we used to turn, whatever, X number of deals per month. Now we're turning like a lot less, or they're doing different types of deal. They're just doing, you know what I mean? So there's some pain out there, but people adjust, and you know what I find fascinating? I have a friend of a friend who bought 2 pre-construction condos 2 years ago. And funny enough, and I told her not to do it. I said, don't buy. And it was one of those classic mistakes, Patrick, that you and I warn against. Purchasing for the purpose of assignment, had no intention of possession, had no intention of renting, had no intent, just straight assignment. And by the way, these are multi-million-dollar condos. Like, we're talking about $1.5, $1.7 million condos. So I was thinking to myself, this was 2 years ago. Now, right now, she's freaking out. The good news is that her condo is not going to be ready for 2 years. And probably with delays, that's going to be 2.5, 3 years. And I'm thinking, is she going to miss the pain? I think she might. I think she might get lucky. We'll see.
I think what's going to happen is you're going to see a lot of chop sideways in the real estate market. A lot of people are still waiting for prices to come down. And, depending on where you want to talk about regionality, I think you're going to see prices chop sideways for a long time. I don't think we're going to see significant drops. We're going to see big drops off the highs, because that is right now is what in fact is happening. But if you take out the highs and just kind of, average it out, most places, not all places, and it's hard to generalize, I know, but you're starting to see chop sideways, but prices haven't dropped below.
Just in the condo market, or everywhere?
Everywhere. I think it doesn't matter, even in property classes. You're not falling below 2018, 2019 numbers, number one. You're going to see Alberta pick up, but they're just catching up. I mean, when we talk about Alberta being hot, at the end of the day, when you look at what's happening economically, when you look at incomes, for example, when you look at jobs and population growth, Alberta has a lot of room to catch up. Here's my concern about Alberta, and I'm going to keep throwing this out there. I've only started talking about it. I think there's a real concern about the possibility of overbuilding in Alberta, by the way. And I think it's a real possibility. When you consider just how easy it is to build in Alberta. To their credit, by the way, they don't have huge development fees. Zoning is easier. They get stuff done. They move forward. And what that then draws people into playing the development game, which is how you need to go right now. And so there is a huge risk, though, because of the MLI Select problem. I'm kind of jumping around here, but let's go to MLI Select, CMHC, finance 95%, 50-year amortization. Developers are looking at that going, man, this is like no brainer. So what have we seen? And here's where I think we're going to get caught up. It's always going to be a lag. I'm right 2 years later, but I believe that we're going to see a significant overbuild of rental units. And I know that's kind of, what are you talking about? But
in Alberta, you're saying?
I think we're even going to see it in some other areas, dude, because I'm telling you right now, what's happening is that they're cutting back immigration significantly. So right now, we're all good in the hood, but we have to look into the future and go, oh, what's going on in terms of immigration? What's going on in terms of job growth? So this is a cautionary note. I'm not saying that the world's coming to an end. I'm going, we have to be really clear on our strategy. So this goes back to what we're talking about today. Cash is king, cash flow is queen. That's kind of how I titled it. In understanding that this is not the time to be, throwing cash up against the wall to see what sticks. You got to be very strategic. And that's part of what we're here to talk about today, which is that ADU, that how do we actually maximize cash and cash flow for anything we're taking on. So I want to make sure that I'm not painting everything with one brush. And I know we're trying to segment this a little bit so that it does make sense. So, first and foremost, politically, Canada's this is almost, we would call this a political crisis. I mean, when has a country like Canada, when has Canada ever been in this much trouble from a political leadership, a government that is melting down? We have no leadership. Trudeau's on vacation for the next 7 weeks. They're talking about calling an election. Nobody's leading the ship. The rats are abandoning it. Like, what a freaking mess. Like, it's ugly. So how do we get anything done?
Well, yeah, I mean, listen, the good news is in the US, it's been in that state for like 2 years. Their president had full on dementia and was living on the beach and nobody knew. He was ousted, nobody knew. And they're riding the ship. They were in that state for 2 years. So I think who knows? Maybe this will give us the opportunity here in Canada, Patrick. Who knows?
Well, let's talk about that just really briefly. Let's talk about the difference. I mean, Trump isn't even in office yet, and look at the positive impact he's had on a lot of things that are going on. He's surrounded himself with an A team. We've talked about that on a number of occasions, that the people that he's surrounded himself with are all capitalists, by the way. They're all business owners. And if we could just run our country like a business where we actually concerned ourselves with deficits and debt. Anyways, don't even get me going. So the point is that I'm optimistic that should Canada, should we finally at some point get our shit together, and that we can get an election and we can get some leadership in there, and hopefully Poilievre is going to be able to bring a lot of positive change to the table, then I think there's some reason for optimism as we go forward. But it's going to be a while. Let's face it.
Oh, for sure. But we talked about this last month. It's been like 5 weeks ago, Patrick, and we talked about how fast the culture and the vibe can change. And I think we're seeing some of that south of the border. Definitely not everyone, by the way, is going to agree with us. A lot of people are thinking the vibe is going in the opposite direction. But it is what it is. Everyone has their own perspective, but it can change fast, is what I'm saying. And I'm always, I'm the glass half full kind of guy. I'm always looking for that.
Okay, so let's just talk about what's going on in Canada. I think that as much as we can be optimistic.
Sorry, Patrick, just 1 sec here, pal. Hold on. I just got to approve this. Go ahead. I'm submitting offers here. So sorry, I'm literally in the middle of submitting offers right now.
Okay, so we've got a few people watching. So folks, if you got some questions or comments that you want to give to JG and I, we're happy to engage with you. Tell JG how wrong he is and how he needs to start listening to me more. Okay, so let's talk about a little bit about some stuff.
What should I do? Crawl in a hole? Sell all my real estate?
Okay. Quit crashing around. So here's what we got to talk about. So first off, when we look at economically what's happening with Canada, we definitely got some headwinds ahead of us. A lot of people think it's interesting to see the number of people that believe that interest rates are coming down. The Bank of Canada is bringing interest rates down to prop up housing, and that's just not the case. Make no mistake, Bank of Canada is dropping rates, and hopefully they're staying ahead of the economic downturn that we are experiencing. We go back to a fundamental understanding that, right now, economically, I don't think there's any more argument about it, whatever the numbers are. We're actually in a recession. It's just a case of how bad will the recession perhaps get. So, that's the question of the day. Yep. So we have to play into that as real estate investors. We need to get our capital into hard assets. We continue to kind of say that, but let's talk a little bit about some of the strategies that we know are working. One of those being ADUs. So in other words, you're buying a property, you're developing a particular lot, perhaps. You have gained a lot of expertise in the world of what you refer to as coach homes. Some call it laneway. Either way, what you're doing is you're developing an additional unit on an existing lot, bringing that cash flow up, getting a great return on investment. So let's expand on that conversation a little bit.
Well, I think back to the opportunity and the moment right now, and there's a lot of people, and one of the, I think, best opportunities people have right now, Patrick, because rents are still quite high. as rates are starting to come down, I'm hearing people getting mortgages under 4% now, which is great. I think that's a big. I think that's going to be huge into the spring. Fixed rate. Yep.
Wow. Well,
like primary, not investors, but primary homeowner.
Yeah.
Primary homeowner under sub 4%. But that's the opportunity, Patrick, for people to buy a home, put a suite in their home, build an ADU. And if someone is truly committed to their financial future and truly committed to real estate, and they see the future of this, there's no reason you can't buy whether you own a primary now or you're looking to buy a primary. You buy your home right now, put in a suite, then put in an ADU, then rent the whole package out and do it again. And Patrick, I've been on this bender for a while now. If somebody does that only 3 times in their entire life, their future will be financially secure, as you and I have been pointing out for many, many years. And that is a game changer for people. They only have to do it 3 times. They don't have to go buy hundreds of properties like Patrick Francie. They don't have to go and invest in Alberta or they don't have to do any of that. They just have to do it 3 times. And there's some incredible programs right now. The government is giving away money for free to get this done. It's incredible, Patrick. People have to pay attention. By the way, I just want to point this out. When things start to hum again, when things start to go really well, when the condo market comes back, when the economy comes back, when all of the things start going in the other direction, all those programs will go away. That's why the opportunity's now. Do I got to yell this from the rooftops?
Okay, so expand on some of the expand on 1 or 2 or whatever program you're talking about specifically, so that somebody listening can say, "What the hell are you talking about, JG?"
2 things. We just published this on our blog at vistor.ca recently, but it's actually the most recent blog post, right? The government of Canada has given out $80,000 loans at 2% interest for 15 years. That is essentially free money, okay, for you to put in a suite in your basement.
Yeah.
That's amazing. That's incredible. That's free money.
Well, but you make another really great point with when we talk about which we have many times around the self-funding house program. That really is an opening for somebody that saying, okay, times are tight, interest rates are going up, I can't afford a payment. Well, here's an opportunity. Can you be a little bit more creative, take advantage of a program like that, add a suite to your existing home to increase the value, number one, of the property, but also of the cash flow that you're bringing into your household. Now, it may not sound convenient for some people, but that property can then turn into an investment property in a year or 2, let's say a couple of years, that you then can move on, keep this one, put it into your portfolio called a rental portfolio. What's your thoughts?
100%. Now, listen, I'm going to share my screen, Patrick. Put this on the screen. Let's be very clear, Patrick. This is not a question of convenience here. Okay. Let me get back to the convenience question. But if you go here on the blog, go to vistor.ca, go to the blog, and I've outlined all of the details right here of this program, what the terms are. Now, the first thing that someone's going to ask is, does this apply to investors? Well, it does, as long as this is your primary. So even if you have a portfolio elsewhere, if you want to do this to your primary and you plan to continue to live there, you can qualify for this. So read all the terms, go through it. But this, Patrick, is an absolute game changer. And you're 100% right that, this isn't something that you do for convenience, but we published this other blog post on June 12th of this year. It's called Transforming a Single Family Home into a Profitable Investment. And I go through piece by piece. This is an actual case study with an actual lady with a place here in Peterborough. We're working with her. And the numbers are simply incredible, Patrick. She's generating $84,000 of immediate profit. The ROI is 55%, and she will, get this, essentially eliminate her mortgage. That's the benefit of doing this kind of thing. And by the way, this is only this particular case study here on the blog. That's only by putting in a basement suite. Imagine if you also did an ADU, a coach home at the back. It would be a game changer. And that right now, it's the time now to be doing this. It won't be the time when things start to really hum in a year, in 6 months, in 12 months, in 18 months. This will be more difficult to do because why? Price of real estate will go back up. Price of these programs will all go away. I promise you, that's how it works. And all of the construction trades and all that stuff, instead of wanting to work and having the labor available to do these kinds of projects, they're going to go work on the condos. So that's why the time is now, Patrick. It's a huge opportunity.
Well, I think we go back to so many things that, if we could remind listeners around, is that we are in unique times and have been for the past 4 or 5 years. Part of the conversation that I'm not going to get too deep into it, but a lot of what we're experiencing is just the shift in monetary policy that's happened over the past 4 or 5 years. So as much as we think assets are actually gaining value, the reality of it is that our currency, all fiat currencies, by the way, are losing value. So, and of course, the cost of living continues to increase, regardless of what CPI is. It's not like prices are coming down. Yes, some technology is getting cheaper, but when it comes to things that matter, like food, like shelter, those prices aren't pulling back in a meaningful way at all. Some would argue, well, at least they flattened out. Okay, great, but they haven't come back down. So the point is that there's less disposable income. So the reason I share all of this is that it goes back to that fundamental lesson. If you had $100,000 in your bank account and you say, I'm just going to sit on that $100,000, I'm not going to do anything with it. I might put it in GIC and get 3% or 4%, whatever the numbers are these days, I don't even know. But ultimately, it's not even close to offsetting what are actual costs associated with the inflation component of it. So we're upside down. The point is that we need to get capital into hard assets, real estate being one of those hard assets. We can then expand on that and say there's Bitcoin, there's precious metals, there's Rolex watches, there's art. The point of it all is that we have to get our capital into stores of value. And in this conversation, it's about real estate. And then on top of the real estate is gaining the cash flow that we want to gain from that real estate. And that's the fundamental. But you've said it. We were at an event. We were at the Expand event. So Real Estate Investment Network, Victor Properties, Wealth Genius. We did the Expand event with Alfonso Quadra. And what did we start to really understand is that in these times where costs are coming down, JG, and you pointed it out brilliantly in your presentation, is that counterintuitive. It takes courage to go through these times, but your cost of labor, number one, it's accessible. Number two, the costs have come down and or are way more competitive than they've ever been in the past. So your cost of development is actually less expensive through these kinds of economic times. So your upside, you have far more gain when the cycle eventually turns, which it will, which goes back to, do we know what the timing of that cycle change will be? I mean, there's so many variables. We'll be lucky if we can call 6 months in advance what's going on economically. But the point of it is that getting capital to work in real estate right now is a very, very good time to do that.
That's actually the beauty of this. That's actually, to me, that when I understood that, Patrick, and it was thanks to Rain in 2010 that I understood this, but that is actually the beauty of real estate, is that it moves so slow and you can see it coming from far away. You can see the trends changing, unlike the stock market where things, are up and down, and, Elon makes a post and, Tesla stock is way up and Tesla stock is way down and so on and so forth. It's not like that in real estate. You could see it coming from a long ways away. If you know what you're looking for, you could see it coming. It's like a slow moving train. You know where it's coming, you know where it's going, and you could just get ahead of it. And that's the beauty of this, Patrick. So if somebody's, sitting here today thinking, okay, JG, Patrick, I like this idea. That's great. I need to make some changes in 2024, 2025, and I need to make these changes so I can benefit in 2027, 2030, 2035. Perfect. Real estate's great for you. If you're like, listen, I need to make an extra $100, $200, $300 a month or $2,000 a month, then real estate's not necessarily right for you right now, because that's not what real estate is. Real estate is a wealth play, and one of the biggest, and Patrick, you and I have talked about this to ad nauseum, but the fallacy that someone is going to build up a portfolio and then live off their cash flow forever is just straight up bullshit, and it doesn't work. But real estate's an incredible wealth tool for the right people at the right time, and for some people, now is that time. There's no doubt about it.
Yeah. Hey, so Robert asked a question here. He's heard that when you accept that $80,000 loan, if I'm reading his question right, you're actually giving up the tax exemption on the capital gain and to the position determined by this sweet whole home. So I don't believe that's the case, Robert. JG, can you? Because I think what he's saying is you're turning it. It's still a primary residence, so you're not going to give up the capital gain on your primary residence. I think there may be tax implications because you're increasing revenue and you're going to have to claim.
But there's so Robert, number one, that's a good question. I haven't went through this program myself, but what I can tell you is this, and this might help answer that question, is anytime you do a suite in your home, you on that part of your home, you will have to pay capital gains tax because you're not living in that part of your home. So but that's going to happen whether you take this 80 grand or not. If you're committed to real estate and you think this is a good move, that's going to happen regardless. And I would caution, and this isn't a note specifically to Robert, because I think that's a very heads up question you're asking there, Robert.
That's a great question, by the way. I love the question.
But I have seen in the past, and this has no bearing on what Robert's asking, but I have seen in the past where people don't want to do something positive for themselves because they're afraid of paying taxes into the future. And Patrick, we've seen this. And I had
that happen to me in the late 90s. Oh my God.
Tell the story. I want to hear it.
Okay, well, no, the story was really simple. I went in, I was in Edmonton, I was living in Edmonton, and I'm driving by these condos one day. I'd heard this story about real estate. Somebody said, invest in real estate. Like, that's how vague it was to me. I was still trying to figure out how to spell real estate. So the point of it is, I go into this condo complex. At the time, it was built a really credible developer, Christensen Homes, I think it was, Christensen Homes. And anyways, I go in there and I go, hey, these are really nice condos. Okay, they were, I want to say 47,000 or 62,000, like something crazy like that. I go in and I go, so could I buy this and rent it out? And the listing agent was doing an open house. That's why I went in there. And she looked at me and she goes, yeah, but man, oh man, the taxes on that are crazy. And I went, oh. And I walked out the door and I was shut down from real estate. 6, 7, 10 years later, as I've watched those condos, I even think today, and they've pulled back a lot from those days, but even today, that particular complex is running about $260,000 for those condos. And I'm going, oh, all because I had some story about tax, when the simple solution, and even for you, Robert, in this question, or anybody who's listening, don't tell yourself the story about that. You need to have a conversation with your accountant, and because they're going to look at your overarching picture, your income, they're going to do what accountants do, which is understand what the rules are. So, Robert, that was such a great question. I mean, it obviously initiated this conversation around taxes and tax implications, and the fact that some proportionate share of whatever your house is will be taxable. And by the way, depending on, what they're going to look at, that revenue that's coming into the household as revenue. So you also have to consider what the implications of that are going to be. And I don't mean consider it as in a negative. It's not a negative. It's absolutely,
it's a good thing.
It's a good thing. So anyways, interesting view. Cool.
But I'll explain it let me expand on it, Patrick, because I do think there are a lot of people get stopped because of these kinds of because of tax, fear. Let's call them fears. Yeah, there's a story, there's a fear there. Yeah. So I had a primary, Robert, and then I built a suite in it, and then I moved out. And what happened is when I moved out and I rented the whole thing, I essentially got it appraised and evaluated at that point. So I knew how much it was worth then and there. So I knew what I built it for. Let's just say I built it for 300 grand. I lived in it. I put a suite in it, and I got it up to say 900. I'm just using round numbers. I got up to 900 grand. That part is tax free. Okay, that part's going to be exempt from capital gains because it was my primary residence. Then I got it appraised, let's say 900. And let's say in 20 years, I sell for 1.5 million. The part I will pay capital gains on is between 900 and 1.5 million, not on the first $600,000 of gain, but on the last $600,000 of gain. And that's fair enough. That's fine. I'm okay with that.
Yeah. Listen,
I'd rather not pay any taxes, but that's the rule. So I'm okay with it.
And as it sits today, and although those things can change given what's going on, capital gain, if you're paying tax on the capital gain, it's the least expensive tax that you're going to pay anyway. So it's probably better, and be happy that you're paying tax on a capital gain. It's great to get that capital gain. The other thing that we don't want to step over is that in the self-funding house initiative, there's all these stories. People are waiting for prices to come down so that their kids can buy a property one day and hope they will. I just don't see that happening. If it's not affordable today, it's not going to be affordable in a year or two from now. We have to take advantage and be more strategic. JG, you did it, I did it, and I still, to this day, we look at the self-funding house concept, which is having a basement suite, having a coach home, doing something that's going to bring additional income in. And so for those of somebody who's listening, I just want to buy my primary residence, let alone invest in real estate. The banks and most of the lenders right now, if you go to buy a home and you have an additional dwelling unit or whatever, there's all sorts of terminology. The house hack right now, go to the bank, get a suite, have a basement suite. They're giving you 100% rental offset. So if you're getting a couple of grand a month for rent, that's also being calculated.
And that's a mindset, Patrick. That's a mindset, because a lot of people, especially as like just normal everyday Canadians, as you and I are, we think, okay, be a renter, then buy a home, then if you're lucky enough, become an investor and start doing the kind of stuff we're talking about. But the narrative has to change, because it's not become an investor. It's okay, you might be renting and you're thinking, okay, I need to start putting my money to work for me. I don't want to rent anymore. Okay, perfect. Instead of thinking about a primary residence, first think, how do I get a primary residence with an income suite? Then you could then continue to do that. And you could do that once, twice, 3 times, 4 times. And that is the way to build wealth nowadays. That's been like that for 15 years, Patrick. Like, that's been a phenomenal tactic for 15 years. Now we bundle in the concept that I'm bringing to the table, which is do an ADU, do a coach home, do a laneway home, do a garden suite, and now you have 2 incomes, plus you get to live there for essentially free, and you get to build your wealth all at the same time. It's really a no-brainer, but it's the narrative and it's the story that has to change, Patrick, which is why we do videos like this, in order to start changing that conversation, because the average person isn't thinking like that. And I know, because I went through this myself when I was, and I'm sure you have too, Patrick, when I was growing up, years ago, as I was growing up, me and my wife got married, been married for 20 years now. It was always the same story with her. We got to buy a house. We got to buy a house. We got to buy a house. Why? Because she wanted a home. I understood that. I convinced her. I was going to say by force, but that's not the right thing to say. I convinced her by not giving her an option. And now 20 years later, to this day, we still have a suite in our primary home that pays for most of our mortgage. That's just a smart thing to do, Patrick.
Well, as you know, Stephanie and I have in our home as well. We have tenants, and we have a suite, and so it's been that way since we've been out here. So these are all strategies that we actually are in. We use ourselves. So we're not just talking the talk.
We eat our own. We eat our own cooking.
Drink our own Kool-Aid, whatever phrase you want to use. So there's a couple things that when we look at.
Sorry, bud. Can I just back up one more? Because you said something there, and we're going to step over it. You just said the banks are now giving 100% rental offset. Now, for those, I said a while ago, some of them, what I said a while ago, when the economy gets going again, all these programs go out the window. Patrick, they did not give 100% rental offset for years and years and years. That's new. It's brand new that they're allowing the 100% offset. It used to be 50% and 40% and 60%. Now it's 100%. That will go away, right? So back to the timing. That's why the timing's important.
And so I think anybody who's looking at buying a primary residence, and we of course are the Real Estate Investment Network is involved heavily with the Self-Funding House Initiative with Derek Lobo and Rod Schulhauser. And they have right now, Rohit has built a project and for those who are in the RAIN community or in the Self-Funding House community that we have, if you're going into the portal, Rohit in Edmonton literally just launched a project of self-funding house styles, both detached and semi-detached. So there's an opportunity for both end users in a self-funding home, or even investors, to be able to take those units and put them and use them as an investment and or as a primary resident with the ADU, with that housing hack, as we like to call it, and to help fund the possibility. Because again, affordability, I think we're going to see some chop sideways, as I said earlier, as we kind of entered into this conversation. I think pricing, there's a very strong chance it'll just chop sideways for the next little while. I don't see big drops. I think there's some inherent risks that are happening in certain regions, and I'm going to continue to say it. Alberta is going to go through its cycle. It's going to go through. Be very cautious of the overbuilding that is, in fact, and Calgary's kind of crossed that line, by the way. We'll see. Edmonton will take some time, and when we talk about timelines, by the way, JG, we're talking 2-3 years. So that's the thing about when you look into the future as investors, we have to look into the future and go, okay, what is it going to be in a year from now, 2 years from now? We have to create a thesis around it. We got immigration that's being totally the volume's being turned way down on that, and even into negative territory for a couple of years. There's a story out there that's saying we're 5 million homes short, and that's just not the case. That's in a whole different situation, and it's just it's not factual data, and we have to be, it's a blanket statement that was put out there that everybody seems to have picked up on. So right now, in some regions, there's definitely housing shortages, and there will continue to be that until the slack gets picked up. But as immigration gets pulled back, we have some risks that we got to pay attention to. And the risk being is that if you run out of renters, or if there's more units than there are renters, then you're going to see rents come down. So the guidance here is this, folks, is that when you look and you're saying, okay, I'm buying this property, it only cash flows $50 a month. Okay, got it. But if you look into it and say, well, what if vacancy rates were to jump to 4 or 5% and rents come down to $300? Is that, do you see a future within the region that is going to increase rents, or are they going to chop sideways, or might they come down?
That's why you're being the doomer gloomer boomer right now, Patrick.
I'm not being the doomer gloomer boomer.
Just hold on. Let me break down what you're saying, and let's number one, if people are doing their homework the way we recommend at RAIN, right, the Real Estate Investment Network, and they're following the formulas that RAIN's been teaching for like 40 years, and they have 40 years of evidence. Patrick, we've done courses. We have online courses people can buy. So there's a formula to be successful in real estate. And if you follow that formula, it will continue to provide dividends, and you will make good decisions. If you go invest in a one-horse town with a shitty economy, that's where people are going to get hurt. So let's not be blanketing real estate there, Mr. Doomer.
I'm not blanketing at all. But I'm actually said it. I've said it numbers of times, is that we have to look regionally what's going on. But
yes, I know. You know what that means, but I think the average person watching, they're not quite as sure what that means necessarily. There's lots of courses, though. The good news is you and I have done lots of courses on that. But I want to just dive into one thing you talk about, which is you're not this new thing you're on, is that prices are going to chop sideways now. I've heard it 3 times today already. So let's dive into that for a second. Mm-hmm. What if you make the right moves in real estate? What does that actually mean if prices chop sideways? While the market is recovering, and let's just assume you're right for a second, while it's recovering, if you've done your job, and if you've invested in the right economic region, and if you've invested in the right economic property, and if you've done everything you can, you've maximized your rents, you are going to make money while you wait. It might be $200 a month, might be $50 a month. Maybe I have a property right now, Patrick, just put in a suite, just put in an ADU, rented the upper unit, cash flow $1,400 a month. That is $1,400 per month. Hey, listen, I'll wait. That's okay. I'm making money. I'm making money while I wait. No problem with that. And so if you make the right calls, I don't want people to be scared that the market might chop sideways. Of course, it's going to chop sideways at some point. It can't go up and to the right forever. So it's going to go up and sideways and down a little bit and so on and so forth. And if you make the right moves, you'll make money while you wait. And that's the important thing, Patrick, is RAIN has those formulas.
Well, I think the one point that you make that I probably stepped over is when I say it's going to chop sideways. What I'm trying to also point out to people, if you're sitting on the sidelines because you think there's going to be this epic, bubble burst, you are going to miss the opportunity. So when I'm talking about chopping sideways, what I'm saying is if you're sitting on the sidelines waiting for prices to go down more, you're really kind of rolling the dice. If you buy for cash flow, if you buy the right property, think into the future, and are buying and really doing the math on the cash flow based on rents, you're going to do fine. My point is, don't sit on the sidelines. My point is, get your capital invested into hard assets called real estate. And I mean, I don't know how much clearer I can be. Maybe
no. No, that's good, Patrick. I like that. And you're right. You and I had this conversation with another individual, and that person was asking me the question specifically. You happen to be there. I don't know if you recall this or not, but they were asking me. They said they were talking about the kind of choppiness and the choppiness in the market, and they were scared essentially, and they were saying, I'm so glad I didn't invest in real estate when I wanted to back in 2020 and throughout COVID. And, I'm so glad I didn't. And they asked me the question thinking that they were going to catch me off guard or something, thinking like, oh, JG, you've been investing all the way through. How's it gone for you? And if I look at the results, Patrick, of every single property, I think I've doubled my portfolio since 2020. And if I look at every single result, there was one property that we thought we would be able to exit, and we haven't been able to exit at the price we want. So we're renting it and we're holding on to it. And it's not super cash flow positive. So that one's just like, okay, but there's one deal out of like probably 20 that I've done, maybe more. And I'm thinking, if I look at the overall results, it's been absolutely incredible since 2020. And we've went through a significant upside and a significant downside. And it's still been incredible. So my point is that back to what you're saying, waiting on the sidelines typically is the worst move you could make. That's what I've seen anyways over the years.
Okay. So let's move on to the next topic. Where do we think interest rates are going to go?
Hold on, Patrick. I'm just negotiating another deal here. 1 sec. I'm doing an AFS, by the way. Seriously, I'm literally signing this paperwork right now.
Okay, so fine. So while you sign the paperwork, I'll riff a little bit about what I think about, Bank of Canada drop rates. We can't step over the reality of it is that a 50 basis point rate cut is actually an emergency rate cut. So the Bank of Canada is in fact seeing what we've been seeing and talking about, which is a slowdown of the economy. Arguably, we're into the recession, although the numbers don't show that. We have to look at and lift the hood on what the numbers really are. And the sad reality of it is the numbers are productivity in Canada is at crisis levels. We're just not productive. That's the bottom line. Our public sector jobs have been what's really been driving the job growth primarily, and we can't deny that. The consumerism that immigration drove is also what's propped up this particular economy. So we've been going through this, kind of shift, and as immigration gets turned down and gets dialed down, we're going to start to see some of the impact of that on the economy in terms of GDP, because people aren't spending money. Productivity is down. Manufacturing is trending down. All of the things that we're bumping up against. Now, these are political issues that, are really at the base cause of what's happening. And, as those politics change, we're going to start to see, a brighter future, but we're going to go through 2025, I think, is just going to be a little bit uncomfortable. And that's only to say this is for those who stay focused, who don't kind of curl up in the fetal position in fear, who stay engaged, who stay educated, who pay attention to understanding the economic fundamentals, they're going to do exceptionally well because there's going to be huge opportunities that are showing up. That's, I guess, the bottom line.
Patrick, you talked about economic fundamentals. I've alluded to the course. You and I have done many. We've done many over the years. But if somebody wants to understand economic fundamentals and they want to understand this formula that I've been referencing, where can they go for that?
Well, if you go to, if you want to understand the fundamentals, we got a couple of great programs right now, Real Estate Investing in Canada. If you go to raincanada.com, there's some great deals that we are putting out, Christmas specials and stuff on the actual program, Real Estate Investing in Canada. I don't want to say what the price is, but it's really inexpensive right now. We're just using it as a promotional stuff. I didn't jump on this call to, tell people about that, but if you're if you're interested, there's an opportunity there.
I think we take it for granted. We know this formula literally like the back of our hand. We've only been I've been studying it for 20 years. You wrote the damn formula just about, and you've been studying it for 40 years. So we take this for granted. But the average person that's just maybe picking up this channel for the first time and saying like, hey, what are these guys seeing? That's the formula we follow, and we present that formula. It's like we're not hiding it here. We're not being like, oh, it's just ours. We're keeping this formula to ourselves. Like, we tell the world what the formula we follow.
Well, let's just riff off the formula. Hopefully people are listening and they're interested in this, but let's look at the fundamentals. Folks, at the end of the day, GDP, we hear the number, or we hear it and we look at the number and we want to see it in positive territory. The reality of it is that gross domestic product, when we get into a positive number, really represents the economic health of a country, of a province, of a city, etc. And when we look at GDP growth, when you have positive GDP growth, it means that people are working. And when people are working, it means they're moving into specific areas because there's jobs. When they have jobs, they spend money and they actually want to rent units because they're moving into a specific area where there are jobs. So the point of it is GDP is at the foundation of everything when it looks at the economic fundamentals of what drive real estate. I mean, it drives the economy, it drives real estate, and jobs are at the base of everything. People have to be working. That's it.
The three fundamental drivers that Patrick's talking about is GDP, and then population, and then jobs. And if those three things are growing in that particular region, not Canada-wide, we don't care about Canada-wide. We don't invest in Canada-wide. We invest in a particular region. So if I'm investing in Peterborough, Ontario, I'm going to see what's happening in the GDP of Peterborough, Ontario, what's happening with the population of Peterborough, Ontario, what's happening with the jobs of Peterborough, Ontario. And if those three things are growing, then you can count on the rest of it continuing to grow as well. In general. And that's it, Patrick. It's really like that's the beginning of the formula. And then you got to pick the right tactic at the right time for the right market. But if you get the fundamentals wrong, you can't recover from that. The tactics don't help you, like whether you do fix and flip or whether you do wholesale or whether you do RTO or whether you do buy and hold. The tactic doesn't help you if you get the fundamentals wrong, which is why you spend so much time to ad nauseum putting me to sleep with your economic fundamentals.
I know. Well, what can I say? It's not all about you, but I think, you said that really, really well. And I think that, here's a fundamental around certain things, that we talk about right now. If you look at different economies across the country. So we look at Alberta, for example, we look at Ontario, the different tactics. So, right now, buy and hold in some areas just doesn't make sense. You actually literally have to have a coach home or an ADU. It has to happen. Then you look at and say, okay, well, rent to own is a really great strategy in some areas because of the affordability. People have they see into the future and they go, well, I could have the income, but if I could just rent for now and then kind of build the base. And so a rent-to-own strategy works really well. And then you're problem solving with others where an agreement for sale comes into play because you've got individuals who are in trouble financially for whatever reason, and then you can help them solve their problem. So, ultimately, depending on what part of the country you're in, Western Canada is doing better than Eastern Canada. I mean, the recession is going to be an Ontario-driven recession primarily. BC will be slightly at the effect of it, as will Alberta, parts of Alberta. But ultimately, we have to look at each region, look at those three things: GDP, population growth, jobs. If people are working, man, oh man, we don't have a lot of problems.
Patrick, you talked about something interesting there. You talked about how some, and it's a good example, in some regions, buy and hold isn't working right now. And in some regions, which is what I've been saying, people have been wanting to do buy and hold for years and years and years, and the number didn't make sense. Like in, for example, in many places in and surrounding the GTA, buy and hold hasn't made sense the last, like from 2020 to 2023, it didn't make sense. It's starting to make sense again because the numbers have shifted. So that's the point of this whole thing is you want to just, the tactic is really important. The region is really important. The economic fundamentals are very important. And there's essentially a code to this whole thing. And that's what we teach in the course, Patrick. And of course, how many hours is that course? Like 50, 60 hours, I think?
62, 68, something like that.
Yeah.
It's very thorough.
So it's over 60 hours. So of course we can't teach you all this like in this Facebook Live here, or in this, video, but check it out is the bottom line. And you'll find out that code. And then you'll feel, and what I think, Patrick, is so important is it's we haven't said this enough, not nearly enough now I think about it, but it's in moments like these where things are choppy, there is market turmoil, there is some tumultuousness to the market. It's in moments like these that quote is even more important, because it gives you that confidence to know, I do know what I'm doing and I have a formula that I'm following. This isn't just willy-nilly here. And it's in times like these that it's even more important to rely on that stuff.
Yeah. And by the way, so we do, and I do, and provide economic updates every month, sometimes even more. JG, you and I do rein it in segments when we're talking about what's going on economically. We're always having these conversations about what's going on economically, so that you as a real estate investor, or perhaps a homeowner or future homeowner, can start to wrap your mind around the opportunities that are presenting themselves given what's happening economically. We as real estate investors need to look into the future. We get caught in the emotion of what's happening today, or what even happened a year ago. I mean, gosh, who cares? You know, what is happening today is all that is a base to look and say, okay, here's what's happening today. Where is this going to in 1, 2, 5, 10 years? We have to look into the future. And that's what makes real estate investing successful. And we know this: when you invest in real estate over time, and for as we can debate it, is real estate going up, or is monetary policy, devaluing our dollar? Those are big conversations, but ultimately, when we put our capital to work in real estate,
the result is the same, though.
The result is the same. Exactly. Future wealth preservation, financial futures based with a foundation of real estate is got a track record of success for many who take the time to learn it and to do it right and stay engaged with what's happening economically. So that's what I got to say. JJ, we've had a few viewers today, not a lot of questions or comments. If anybody wants to dig into something, we're going to sign off pretty quick, but if you got some questions, let us know.
Yeah, for sure. And make it quick, because I got 2 deals here I'm negotiating like in real time, and I got to go sign these agreements. So
okay. So hold on. Let's talk a little bit about politics. Do you think there's going to be, you don't follow it like I do, but do you think there's going to be, what's your gut? Is there going to be an election, let's say by the end of March into April, or are we going to have to wait until next October?
I think you're going to have to wait until next October. He'll just drag this out as long as he possibly can.
Yeah. I tend to agree.
It's like it serves that. There's no it just doesn't serve him. He thinks he and they think that if they give it a bit more time, they can put things back on the rails, so on and so forth. It doesn't matter. It's just but at the end of the day, I do not think they're going to go with an early election. And I want nothing more than an early election. I mean, they should
that'd be a Christmas
right now.
That if Santa came early, that would be one of the best gifts ever. Sadly, yeah. I don't think Trudeau's got I don't think he can see it in himself. But anyways, okay, JG, thanks for doing this, folks. Hopefully you got some stuff out of it. A little bit light on questions, but JG, hopefully we've been of value to people. That's always one of our end games, so
we do our best. Merry Christmas, happy holidays, happy New Year to everybody, and looking forward to a huge 2025. Happy
Christmas. That's a I didn't know that. That's a UK, I think, thing.
I know. Yeah. Happy Christmas. Yeah. It's cool. I like the way they do it.
I like that. So, and if you're traveling, travel safe, drive careful. JG, thanks for doing this, buddy.
Merry Christmas, pal.